Let's dive in. You wake up, check your phone, and see red arrows. Stocks are set to drop. The stock market is where you buy pieces of big companies. When they do well, your piece grows in value. But before the market opens, we have futures. Contracts where investors bet on where the market's headed. Think of futures as the market's weather forecast. If they're down, it's like rain is coming, no guarantee but a warning. Futures trade nearly 24/7, reacting to global news before you've had your coffee. They're the market's early warning system, showing if investors are confident or nervous. But remember, futures aren't the whole story, just a key piece of the puzzle. If futures are deep in the red, it means big investors are worried, and that mood can spread fast when the market opens. It's a chain reaction. Nervous futures can trigger a sell-off at the opening bell. Understanding futures is like knowing the first play in a football game. It sets the tone, but doesn't decide the outcome. On Monday, August 4th, 2025, the tone was pure nervousness. Futures signaled something was spooking the market. And it wasn't tech or retail. The focus was on oil, and a major decision made halfway across the globe. That's where our story really begins. So what happened? Last Friday the market tanked. The Dow S&P 500 and Nasdaq all dropped, wiping out the week's gains. Investors were anxious, selling stocks and moving money into safer assets like government bonds. Why? A weak jobs report hinted the economy might be slowing. When profits look shaky, stocks get sold. That Friday sell-off bled into the weekend, and by Sunday night, futures were ugly. Dow futures pointed to a 150-point loss. S&P and Nasdaq futures were also deep in the red. The anxiety wasn't going away. Investors saw weak jobs data and thought if the economy slows, energy demand drops, putting oil in the spotlight. The futures drop was a direct continuation of Friday's fears. It's like a scary movie cliffhanger. The monster, economic slowdown, is still lurking, and that fear was about to get bigger, thanks to a group controlling much of the world's oil. Their weekend decision was gasoline on an already smoldering fire. The stage was set for a dramatic showdown between economic fears and global energy policy. Who's pulling the strings on oil? OPEC, the world's most powerful oil club, including Saudi Arabia, Iraq, and Russia. Together, OPEC Plus controls a huge chunk of global oil. For a year, they kept oil production low to keep prices high. But over the weekend, they changed course. OPEC Plus announced they'll start increasing oil output in October, phasing out production cuts. That means millions more barrels hitting the market over the next year, a major policy shift. Why now? They see the same weak economic data as everyone else. By increasing supply, they're betting it's better to sell more oil at a lower price than risk being stuck with unsold oil in a slump. It's a strategic pivot, from propping up prices to fighting for market share. And it caught traders off guard. Here's where supply and demand kick in. OPEC Plus announced more oil supply, just as traders worried demand was weakening. More supply plus less demand, prices dropped fast. West Texas Intermediate crude plunged over 3%, below $75 a barrel. Traders rushed to sell oil contracts, fearing a glut. Markets react instantly to news, not just reality. The price drop hammered oil company stocks. ExxonMobil, Chevron, and more. Lower oil prices squeezed profits, so investors dumped energy shares, dragging down the whole S&P 500. But it's not just oil stocks. Lower oil can sometimes help consumers, but this time, Wall Street saw it as a recession warning. The thinking oil only drops this much if a major slowdown is coming. That fear spread to banks, industrials, and beyond. The oil drop became a giant red flag for the economy's health. It wasn't just about oil. It was about what oil prices were signaling. The market was officially spooked. So, what should investors do? First, don't panic. The market goes up and down. Knee-jerk reactions lose money. The next few weeks will be all about the economy. Is this slowdown real or just a blip? Watch inflation data and listen to the Federal Reserve. If inflation cools, rate cuts could boost stocks. Keep an eye on oil prices. They're now the market's barometer for global health. If oil stabilizes, fears may be overblown. If it keeps falling, recession worries grow. Energy stocks are the canaries in the coal mine. If they bounce, it's a good sign. Be ready. Have a shopping list of great companies to buy if prices drop further. Market sell-offs create opportunities. Don't try to time the bottom, but be prepared. Storms pass, and there's always a bull market somewhere. Do your homework and stay alert.